Good morning, everyone. It's Monday, October 6th, and the market has yet to open. It'll open in about 30 minutes. Excuse me. And I am joined by Daryl. How you doing, Daryl?
Doing wonderful. Pretty exciting morning.
It is. And, the market in September did quite well. And I'm cautiously optimistic or in a little bit of disbelief how good the market's been. Now we did take some medicine earlier this year, right? From March to April 9th. Boy, it was some some pretty good medicine we took. The market went down and the S&P like 19%. And since then it's just been like going up and to the right. And the first 3 trading days of the market, it's been pretty good. Been pretty good. So will that continue? Well, we'll see. We will see soon. The market, the pre-market is supposed to open up higher. The Nasdaq's opening up quite a bit higher. So, big news today is AMD. Its stock price is really up today because it joined forces with OpenAI, and OpenAI is going to open up data centers, and it's going to use AMD chips. It had some entanglement or arrangement where AMD provided OpenAI warrants of its stock. So the stock's really moving 35% in the pre-market. Wow, what a move. And it's not a small cap, 267 billion. This is probably the news that is making catching my attention this morning. And we can go over AMD. We can go through its fundamentals and see, where I think that the stock should be priced based on cash flows and based on the profitability of the company. Now, I'll probably have to think through, I guess, growing the business will grow faster if they're going to have this type of investment in the future. So I'll reconsider my growth rates on AMD as we go through it. And then Daryl will come in and take a look at the charts. The other 2 stocks that we had in mind, second is Palantir. I think Daryl's got some comments on Palantir, and I definitely have a valuation on them. And then the third being Sprouts, the grocery store. Now, we've already got some people online. Looks like Falls Grave. Good to see you.
We can take a look at his question.
Yeah.
I can answer that with the seasonality chart.
Yeah, let's do that.
Let me present.
Sure.
You can give me the screen.
Yeah, good point. So the question is, good morning. Isn't September usually a down month historically? The answer is yes, historically.
Yeah.
Daryl, you want to elaborate?
What this seasonality chart shows is that September, the SPX ends higher at the end of the month compared to the beginning of the month, only 46% of the time. So it's less than 50%. And the typical drawdown is 1.2% over the last 13 years. But it did something a little different this time, as we are all aware. I'll just go down to 1 year. And September actually had a 3.5%. It was 3.5% higher at the end of the month than it was at the beginning of the month. So it kind of pushed against the typical seasonality narrative. Now, October is higher at the end of the month, 54% of the time, with an average over the last 13 years at 1.3%. November is 92%, is at higher at the end of the month than at the beginning of the month, with a 3.9% gain. So that's where the seasonality is, and this year definitely bucked that trend. and we'll see how October plays out.
The one thing I'll come back to is earlier this year, we had a huge sell-off, right? Where it was induced by concerns that tariffs were going to really torpedo the economy, and that caused a big sell-off. So I think that could affect the rest of the year substantially. So we could take a historically bad month and it was good. October, is it going to do well? I don't know. But I wasn't expecting that the market was going to sell off the S&P by close to 19% from late February to early April either. So I would add my 2 cents there. All right, good stuff. The other question or a comment that Falls Grave has, a couple requests. You want to look at gambling compared to DraftKings? Yeah, I think that'd be an interesting comparison. And then CNC. So I've got all three on the list. We'll get through a couple of stocks. We'll finish AMD. We'll hit Palantir real quick, and then we'll get to your questions on gambling versus DraftKings, and then we'll look at CNC. All right, so let's take a look at advanced micro. This stock for the past year, hasn't been a superb winner. Year to date, it's been good. 36, 3%, not great. 5-year looks pretty decent, and it's provided opportunities for investors to jump into AMD. I historically haven't liked AMD, and because their cash flow generation hasn't been great. And we'll take a look at their fundamentals, and then I'll show you my valuation. And I'm going to let Daryl cover the charts before I do my valuation, because I'm going to change my growth rates, knowing that they're going to do this deal with OpenAI. It should help them with their growth. So AMD, as I speak, is $267 billion. In about 30 minutes, it's going to be more than that. I can't do the math in my head because it's too early, and I'm just working on my cup of coffee. So give me another cup of coffee in about an hour and I can do it in my head. All right, moving on. PE ratio is a little high. Forward PE 32. Analysts think it's discounted by 7%, but I'm sure they're looking at their price targets thinking, well, things are changing real quick. If the company is growing 27%, which is very good growth, they're a semiconductor stock. They are in the data center. So they are inside the data center. So they should be seeing growth from the data center. And they certainly are. 31%, very good in the most recent quarter. Looking at their profitability and cash flow. So historically, you see how their cash flow has kind of been all over the place. And AMD is an old company. It's an established company. I wanted to say old without saying old, but they've been around for 40 years. They were like Intel's challenger, but it wasn't really a challenge. Intel was always huge and AMD was always up and coming. But one thing they did do is they invested more in the data center than Intel, and now that's probably going to help them. But their cash flows have never been, like what you expect out of a semiconductor company. Semiconductor companies will develop chipsets that are then used in computers, laptops, phones, data centers, fast servers, commodity servers. They're installed in different use cases, and then it turns into a gravy train for the semiconductor company, because now you have a lot of businesses just buying your chips, and it's very profitable. It should therefore create a real good, consistent cash flow, and it just hasn't been the case with AMD. That historically has been one of the things that I look at and I'm like, I don't like that. I kind of wish they would just be like most typical semiconductor companies, but they're not. Their gross margins are not as great as a Broadcom NVIDIA, but they're good. I mean, 51's good. It's not great. And their cash flows are getting better for the, trailing 12 months. $4 billion is good. Now, these numbers are going to get better if OpenAI is going to buy a bunch of their chips and create a big data center. When we look at I don't think they carry much debt, but let's take a look just to be sure. And yeah, they have more cash than debt, so they're good. They're sitting with a good balance sheet. Let's see what analysts are thinking. So we've got 33 analysts, and the top analysts have price targets ranging from it's worth 213, and a skeptic is at 120. So overall, the top analysts are thinking it's discounted by 10%. Now that's going to change quite fast because they were going to grow nicely over the next couple of years. That's good growth on a big business. And now, if they're going to start building a data center with OpenAI, maybe these numbers are going to be quite a bit more. Maybe it's going to be 30% growth next year, 30% growth in 2027. And that is going to change this valuation. So I'm going to change my EPS and probably make it more optimistic on my valuation. So that's a quick intro to AMD. What are you seeing on the charts with AMD?
Okay, so I drew some trend lines because it has been in a downtrend. So we'll talk about what that means here. They are trading above an upward sloping 20-day, which just bottomed and is now rising. The 50-day has been rising pretty significantly, and it's starting to flatten out a bit. And the 200 had been declining, and it looks like it's reached a bottom at about 123, and the 200-day is currently sitting at about 128. So whenever you have a 200 declining like this, you're definitely in a downtrend. We were in an uptrend. So I have this really long line here, which is a downtrend, which it looks like it could break out at around 178. What's it going to open at this morning, according to the futures?
According to the futures, it's going to open up at 224.
Oh, geez.
226. It's moving
Okay.
fast.
So it's gonna blow way past this today. And then we have a shorter downtrend starting, let's see, 7 October of last year. And it broke above that in June. And then this shorter downtrend, it actually broke above that at 102. And that was on May the 9th or so. Things do seem to be improving. Friday, when they closed, they created a bearish engulfing candle, which would have told me that in the short term that it was going to pull back. That's obviously not the case given the news that we've received on AMD. The RSI is sitting above the midpoint at about 54. Friday, it had rolled over back to the downside, closer to the midpoint. We did have a bullish crossover on the 18th or so of September. And the 12-day moving average of the PPO is in positive territory and bullish territory. I can also see that the accumulation, which had been in a steady decline since the 5th of March of 2024, began to increase on 7 July 2025. and the money flow is positive with the exception of a 2 or 3 weeks here. So that part is looking good.
Mm-hmm.
If it's going to jump up to 226 today, I don't know if I'd be following that, but it'll be exciting to see if it can hold at those prices throughout the
Yeah.
day today.
And I updated my valuation. I changed my growth rate. I had it at 20%, grew it to 30%, updated based on their most recent cash flow number. And I'm getting to a fair price of $217 per share. So the stock is at 226. Yeah, you know, if this deal, and that's assuming they're going to grow their cash flows quite a bit over the next 4 years. So this is on the edge of being a little too optimistic, but if I take that agreement at face value and it actually happens and it grows the business for 3-4 years, yeah, I think they're worth $217 a share, and they're going to open higher. So it would not be a stock that I'd be overly interested in. It can, it's good to do valuations for me because at least I know, do I get everything? Meaning, do I get an exciting business that's growing? Great. Market likes it. It's part of a story that the market likes. And I get a discount compared to its intrinsic value. If I get all the above, wonderful. I'm in. But this one here is just, I'd be chasing it. Right now, I'm buying in semiconductor. I'm buying ASML. I think ASML is priced with a small discount, and I think Qualcomm has better pricing, and I hold ALAB. So I'm just going to hold tight. I wouldn't be buying AMD, not this morning. I know that there's some investors that are part of this channel that are in AMD. So congratulations. That's got to be fun to see your stock go up 30 some odd percent. Looks like Mike is on, and he's going to pass along a comment, which is if you like Meta, now's not a bad time to take a look at it. I would double down on that statement. I would co-sign that statement because Meta is, they have a business that just continues to get more and more, not important, but I would say popular, powerful. They have a terrific moat. They have the opportunity to take this AI paradigm and run with it. And based on my value of their cash flows and their value of their profits, it's discounted by 31%. So this is what I mean when, hey, you can have everything, or I could have everything, I should say. You have an interesting business that's growing, check, that produces phenomenal cash flows and profit, check those off, and I'm getting it at a discount. Awesome. It's been performing great for 3 years. Great. Sign me up. In fact, Meta is the stock that I own most in my portfolio. So I will co-sign that comment. Thanks, Mike. Good to see you. And Mike missed on NVIDIA. Me too. You didn't miss on AMD. Congratulations, Mike. That's got to be a fun day for you. And then Ben 10. Cool. All right. Good luck with Meta. Meta's going to be one of those, I'm just going to hold it stocks because I think it's there. I'm getting creative on smaller, smaller caps, but Meta's just going to be a good stock for me to hold. All right, so we're going to move to Palantir, and I I think I'll let you start if you wouldn't mind, because I think you wanted to kind of go down to stream of thought on Palantir, and I could show what I've got.
Yeah, so we talked Friday afternoon about this stock, and they took a big hit. Can't remember what they were down 7%. It was basically $14 a share, and it was on some news that found some cyber security entry points into their software, and they took a big hit on that. Not long after the market closed, Palantir said that's already been fixed. And I said Friday that coming down to the 21-day moving average, because it doesn't do that very often and stay below that very often, is kind of a gift. And so today I've got an order prepared. I'm going to pick some shares back up. I haven't owned this. I've just traded this one for fun.
Mhm.
But this was a gift, I think, and it's going to be up this morning on the news that software issue has already been fixed.
Yeah, the stock's up 2.5% in the pre-market. Market's going to open in about 8 minutes. That's certainly the case. Anything else on Palantir?
Nope, we just talked about it on Friday, and I wanted to make sure everyone knew that it's not really an issue.
Yeah, it's bouncing back, and Palantir is Palantir. It's been a superb success, and valuing Palantir is almost kind of like I'm not quite sure that Palantir trades on valuation. I would almost be certain it doesn't. It doesn't really care about valuations. It cares about, can it continue to rise and just continue to grow. Their growth has been excellent. Their other fundamentals like profits and cash flow look superb, but their growth rate really keeps investors plugged in. Okay, if you're going to grow at that rate, why shouldn't you be worth the hundreds of billions of dollars that you're being priced at? And I get it, that if all the investors want to buy and own Palantir and hold it, then it is worth $410 billion. You just get there through a different method, and I'm going to stick to my method. So Palantir is having a great day. All right, so let's get to a request that came in to compare gambling versus DraftKings. And we had a very good weekend of football. I was surprised by a couple of the games. Philadelphia lost to Denver. Surprised. I think I'm glad I don't gamble, by the way. I have plenty of bets out there on stocks, so to speak. I try to do my homework and make good investments. So when I get to football, I just watch. So I was surprised by Philadelphia losing to Denver. If I had placed a bet there, I would have lost. And then what other game was I surprised by? I was surprised as to how the Los Angeles Chargers folded against who did they lose to? And man, that was a surprise. And then I was kind of busy yesterday. So the only game that I was able to sit down and just kind of relax and watch was the Buffalo Bill New England game. And I'm like, oh, this is going to be one-sided. This isn't going to be all that interesting. That ended up being one of the most interesting games yesterday. So overall, the football season is getting it done for me, and enjoyed it very much. Speaking of which, gambling.com. If you want information so you can do better in your fantasy football league or do better as you put your bets out there, gambling.com. They will give you information. They will provide information, but you don't place bets on gambling. So it's a little bit like a Facebook, in that Facebook is not selling you something. It's not like Amazon where you're buying stuff. You're coming here, you're getting data. You're getting information. You're getting that edge as a gambler. Then you have guys like DraftKings. And boy, I watched some football, so I think I saw at least 5, maybe. I saw the DraftKings commercial 5 or 10 times with Kevin Hart. It's like, man, okay, they're trying to get customers. Can't blame them. But their stock isn't doing all that great. And a couple of things that I'll point out. You guys know the path that I usually take, but I did want to talk about, and I'd love to hear your comments on this, Daryl, is their RSI 18.5. That is oversold territory. It's been sold off quite a bit. Is that an opportunity? Well, maybe. In the last month, the stock is down big time, down 26%. I think what's going on here is that sites, starting with, I think it's Kalshi, takes bets in the US for football games. And those are predictive markets. And you have Robinhood selling contracts that resemble a gambling bet. And it's a kind of a prediction market type of contract. And you could say, hey, I think tonight's Monday Night Football game, and I don't know who's playing, I forgot. I think this team's going to win. And I think with predictive markets, you either have to bet with one team or the other. There's no like you get points, right? Like DraftKings, I think if you place a bet there and you take the underdog, you would get, a couple points. So your team just has to keep the game close and then you win the bet. I think the predictive markets, it's one or the other. And you get, like, if you take an underdog, you would get paid a higher rate. So you get compensated by the amount of more you would win if your team comes through. So I think this is the story that's really affecting these guys. As Robinhood succeeds in launching their predictive markets business, the market believes it's going to take some of the addressable market away from DraftKings. So that's happening. Now, as we look at gambling for the last month is not doing good, but it's not getting hammered like DraftKings because these guys are a data company. So we're talking about two different businesses that are in the same ecosystem, but different businesses, right? They're structurally different. Gambling, it's like, hey, we want people to come to our site. They're going to appreciate all our data. We're going to try to be more of a neutral information provider. And while they're on our site, we're going to sell them advertising, or we're going to sell advertising or advertisements on our site. This is a small cap, 296.7 revenue. You're paying 2 times revenue for a business. Interesting. PE 20. Forward PE less than 10. Analyst 85% discount. Whoa. Over the 1 year, over the 5 years. So over the 1 year, not doing all that hot. 27% growth. Okay, they're small, but the market cap's tiny. 29% growth in the last quarter. And we're getting into, I believe, the heart of, speaking for myself, this is the funnest part of the sports season because it's NFL football. Love it. I enjoyed the NBA basketball season, and that's starting in 2 weeks, and really enjoyed the playoffs for the NBA. And it's great to see Oklahoma City, a small city, take the championship. So that's great. And that team's good. So, and you have baseball, you have playoffs. I'm not a big baseball guy, but the Dodgers beating the Phillies. Hopefully Phillies fans aren't upset too much. But that was pretty impressive that the Dodgers went into Philadelphia and won. So there's just a lot of good stuff that I think is going to drive traffic to gambling.com. Just a lot of good stuff. So I think the growth is going to continue. And the thing that I will point out is I love businesses that make a lot of money. 94% gross margins. There's a few businesses that are better. Visa, because they just have a platform and voila. But this gross margin, Reddit isn't as high and they have extremely high margins. Meta, not as high. They're a massive business, great margins. In their space, which I put them in communication services, not gambling, because that's what they're doing. This is one of the most impressive gross margins numbers that I have dealt with. Free cash flow yield, 31%. So these numbers are like, whoa, hey, I'm paying attention. So that looks good. Let's see this forecast, because these analysts are like saying 84% discount. Only 3 analysts, because it's a tiny cap, right? But at least they're good. At least they're good numbers. Now, more analysts are putting their thoughts into the forecast, and the forecast is they're going to continue to grow. That's pretty decent growth, by the way, in 26 and 27. Like to see it stay in the 30s, but we'll see. We'll see this year. Wow, look at that. Really nice growth. And just to make sure the balance sheet isn't going to be a nightmare. So they have $95 million of debt, $19 million of cash, so $76 million. Debt to EBITDA of 2. So we're good there. So that's gambling, right? So now let's take a look at DraftKings, kind of like look at it fundamentally. You know, it's almost like sticking with the sports theme. You know, this quarterback doesn't play all that often, but boy, when he plays, his completion percentage is super high. He throws for touchdowns, doesn't throw any interceptions, but he just hasn't played a whole lot. So that's a small cap. Now we got DraftKings, bigger cap, 17.5 billion. Market has opened. These guys are open to higher. We talked about the story that's kind of more recently keeping the stock down over the 5-year. And I've heard so much about DraftKings for the last 5 years that I am surprised that they're not doing this well. Flutter, which owns a rival, betting site, they've done better over the last 5 years. So, all right. So this is the 1 year. The 1 month is where things are kind of spooky. $17.5 billion market cap. Revenue of 5.4 billion. So you're paying about 3 times revenue. Forward P of 45. Analysts do think this is an opportunity with a 50% discount on the stock. So this is quite a bit bigger than gambling, and they're growing at 25%. I'm impressed with the growth rate. So looks good. Now let's keep going. Let's look at gross margins and net free cash flow and so forth. So the gross margins are 43%. Those are decent, but they're not good and they're not great. 43% is okay. They're not quite profitable. Their free cash flow yield is 9%. So it's okay. It's just not, wow, what a valuable business kind of situation. And nowhere near gambling. Okay. Gambling's fundamentals are really, really good. So we looked at that. I think their balance sheet's fine. And yeah, they have net debt of $647 billion. So really their balance sheet's fine. So as we look at analysts are like, hey, I don't understand the market. The market's really discounting the stock. The top analysts think this stock's discounted by 53%. If you look at their profitability, they're going to keep growing. That does look good. That looks pretty darn good. They're going to be a $10 billion business in 2028. Their profitability is really growing. That looks great. Now, are prediction markets going to affect DraftKings? Just qualitatively, big picture, I don't think so. Why am I thinking that way? I think that DraftKings has a very strong brand with sports enthusiasts. Like, do I kind of combine Robinhood or Kalshi with sports? No, I don't associate the two. But DraftKings, oh yeah, of course, DraftKings. It's like the number one brand right now for online betting. So if you want to bet on a football game, basketball game, baseball game, DraftKings. So I think they're probably the whole threat of the predictive markets story is overplayed. I think it's not going to hurt them as much as maybe the market's thinking, but that would be total judgment call. That's how I see it, and you'll have to make that decision for yourself. But I think these numbers look really good, these growth numbers. So they both look good to me, high level. Before I go to my valuations, could I turn it over to you to look at the charts, and then I'll show my valuations?
Sure. So gambling isn't trading much above where it IPO'd and bottomed out at about $6.55 or so. So it's about $1.50 maybe above that. It is trading below a declining 200, a declining 50. The 20-day is at least leveled out, but for the past month, they've been consolidating here. And if I drew a downtrend, you can see where it would probably land at around 1050 or so to get out of this downtrend. The RSI did get very low. It's currently sitting at 46. The PPO is in negative territory. There was a bullish crossover in negative territory around the 28th of August. While the accumulation looks pretty pitiful at the moment, this is the lowest level of accumulation since they IPO'd. And the money flow is negative right now. So this looks a bit risky to me. Then we can take a look at DraftKings. I'll just look at a year on this one from a stock chart perspective. Looked a little bit better until the beginning of September. Looks like it's being sold off due to what you talked about. So it is trading below a downward sloping 50, 20-day, and it is trading below a downward sloping 200-day. It did get as low as $29 back on April. So we're not terribly far away from that, only about 10% or so. The RSI is really negative at 19.5. Anything under 30 is considered oversold. And this has been in a bearish crossover on the PPO since about the 3rd of September. And the difference between these the 12-day and the 26-day, maybe on Friday it looked to maybe have been narrowing, but up till that point, these differences between those two averages had been increasing. And then while we were at peak accumulation at the end of September, it has really fallen off back to where it was back in early June. Money flow is really negative as well.
Yeah, man.
So they both look a little precautionary to me.
Interesting. Yeah. Man, I'm amazed at how fast the market reprices a company. And, this is DraftKings is relatively a small cap, right? But you look at AMD, it's up massively. I mean, that's a lot of capital going in and buying those shares. So it's always fascinating to me. All right, so the request was made. Let's compare DraftKings versus gambling. So I put my two valuations head to head here. Let's compare the two. So overall, DraftKings discounted 13% when I look at the value of the free cash flows I expect in the future from DraftKings compared to its current stock price. And when I compare the value of its future profits, intrinsic value of those profits compared to its stock price, I get a 13% discount. Whereas when we look at gambling, I have a 79% discount. So I'm on the same page with the analysts. Okay. Now here's a couple of things that are interesting. Okay. So they're two very different caps, right? 17.6 billion versus 295 million. So gambling is tiny. Okay. Free cash flow wise, DraftKings does produce good free cash flow. It should grow quite nicely. But it's just not all that fantastic. It's just okay. And, I add cash, take away debt. I'm using a discount of 9% on DraftKings. I think it's not a perfect company, and they have threats on their business right now. Okay. Now here's super interesting number. Earnings per share, and the stock price for DraftKings is $35, and each share is going to earn $1.29. Okay. Our friends over at Gambling, a share price is $8.26, and they're going to earn the same amount of profit. So the math is easy. Per dollar invested, you're going to be more profitable in gambling. So you're just a penny different, but the stock price is quite different. You're 4 times the stock price on DraftKings. So the yield is far better on gambling. Now, I think gambling is maybe a higher risk. I'm using a higher discount rate. But I actually see it differently fundamentally, or I should say qualitatively. Now, let's say that Kalshi and Robinhood dominate, and everybody puts their bets on those platforms. And it really hurts DraftKings and any other betting site. And Vegas begins to despise Robinhood and Kalshi because those guys like BetMGM and everybody else is like, oh, those turkeys are taking a lot of our market. Gambling continues to operate because it's not like Robinhood is optimized to provide gambling information on sports games. No, they're optimized for stock trading, crypto, bunch of other things. Kalshi is also their prediction markets. They're betting, or I should say I'm just use the word. People can bet on the outcomes of elections. Is Taylor Swift, I think I saw a bet. Is she going to be pregnant by the end of 2026? These are probably fun outcomes that people are putting money on. Gambling is going to continue to be a reference for people that are interested in sports and want to know odds. They want to do homework so they can put better bets this weekend. So overall, for this investor, gambling.com is the choice. So much so that I'm an investor in gambling. Small position, but I wouldn't be surprised if gambling.com is a real good success. What's it been doing lately? See, today it's down 0.72. Over the 1 month, it's down 1.45. It's down 41% year to date. and down 17%. Overall, it hasn't been a superb stock, but I like what I'm seeing. I think the sports world continues to get more and more important, and I'm good with gambling. DraftKings is, what's it doing now that the stock market has opened? Looks like this stock's, it had been green, but now it's down a little bit. Is the market down overall? I'll check that in a bit. So that answers the question. DraftKings versus gambling. Full analysis and charts. And did you have something else you wanted to share, or are we good to move to the next stock?
We can move on.
Okay. All right, let's take a peek and see what market's doing here. So come on, Google. There we go. So S&P is up a bit. NASDAQ is up. The Russell's getting it done, 1.6. Whoa. Dow is down a bit. All right. Looks good. All right, let's catch up on some comments, and then we're going to keep going. I think the other stock that was requested was CNC, and we'll take a look at that next. Let me just catch up on comments. So all right, so Mike with Meta. So we had the comments on Meta, good stuff. And is Meta selling off today or gaining today? I'm not sure. So Chiefs Jaguars tonight. It's another one of those games where I'm like, oh, that one's going to be one-sided. But we'll see. Maybe it'll surprise me and the Jaguars pull off a win. All right. All right. So do I think Reddit is a buy right now? No. I think Reddit, for me, it's a hold because I want to own that company. But I think the stock price is too high based on valuation. And then Mike, you're in gambling. Good to know. Thank you, sir. All right, so let's move on to CNC. And this is a healthcare company. And Centene Corporation operates as a healthcare enterprise that provides programs and services to underinsured or uninsured families and commercial organizations in the U.S. The company operates through 4 segments: Medicaid, Medicare, commercial, and other. Okay, so these guys are providing healthcare in concert, in partnership with the government. Got it. Okay, so year to date, rough. So it's been rough for health insurance payers, but the last month has been picking itself up quickly. It's still down 30, call it 35% or so, and has been rising quite nicely. Now, health insurance payers, if you look at them long term, the kind of cash flows they're going to deliver, profits they're going to deliver, they tend to be discounted. And this one, I'm sure, is probably going to be discounted. Market cap, 19 billion. So it's a small cap. PE ratio is really low this year. It's going to go up next year. Analysts are thinking it's fairly priced and it's a hold. It has been growing, and this is a big revenue company. What's interesting is you look at the market cap, this thing's tiny market cap compared to the amount of revenue you're getting. It's like, geez, a lot of revenue for a small cap. Revenue is growing nicely, 10%. And June 30th. Yeah, their growth is still good. Looks good. Looking at their free cash flow and profitability, cash flows have been interrupted here in 2024, and trailing 12 months is $1 billion. historically, this has been a really good cash flow company. If you look at 20, 21, 22, and it kind of makes sense, right? We're in COVID years, and during COVID, there was a lot of money from the government going into healthcare. And I'm sure trying to help people out, because it's like, hey, we had plenty of people die, plenty of people get sick. I think the government was trying to limit the amount of, deaths, and they flowed a lot of money into assistance programs of trying to get, people back on their feet if they had COVID, get people health care during that time. So there was a lot of money flowing into healthcare, and these guys saw it. But now we're past COVID. It's like, okay, you got to stand up on your own 2 feet, and the cash flow isn't quite as good. Okay. Their profitability, very, very thin margins. Understandably, they're trying to operate a health insurance payer, but historically they were profitable, and they have such a big revenue number that really ends up being a per share portion of being quite impressive. When we look at their balance sheet, so they're basically no debt. They have plenty of cash. Okay, good. And we've got 15 analysts covering it, 10% discount. It's expected that they're going to grow their revenues not as fast as they did in 2025. Did they acquire a business in 2025? It seems that way, but maybe they just had a really good sales year. But that growth looks good, and their profitability is going to expand fast. Their profitability expansion looks really good. So, like many other companies, healthcare looks good, looks really good. Do you have any charts on CNC?
Yep. So this is one that I actually own. And right here, they withdrew their guidance for the remainder of the year. And that was either the day of or the day after the passage of the bill, the beautiful bill. Let's see. Because that was. Anyway, it was within a day or two of that passing that reconciliation bill. So anyway, they really got hit hard, down from right around 55 all the way down to 25 in less than a month and 5 weeks. But they are trading back above their 20, which is upward sloping, and a 50, which is upward sloping. And we don't have much resistance until we get back to the 200-day, which is currently trading at around 49. So my best view at this point, and they are maybe trading up just a little bit today, is if healthcare sector in general keeps performing as it has and getting a little bit better news, then they can keep moving up until they get closer to their 200-day, and then we're going to start battling things out. They are a little overbought at the moment, but the RSI looks really good. And it's actually been, they had a bullish crossover on the 4th of August, and we haven't had a bearish crossover since. But it was in negative territory, and it has crossed into bullish territory now. The accumulation pretty much, fell off a cliff on the day that they pulled their guidance. But it has flattened out and is a little bit on the rise. The money flow is still in, I would call it no man's land. It needs to get above 0.05 for us to be in bullish territory. But they do seem to be making a little bit of progress. So I think this one's going to be a struggle, but I think it's going to get back up to at least the 200-day within the next couple of months. And one of the things that could happen to resolve the government shutdown is Democrats are really pushing for more funding for health care.
Right.
The Republicans intentionally kept that out, and I think it's really a bargaining ploy.
Yeah, I agree with you.
I think they're going to end up with some health care back in there to resolve this. And we're coming up to the 15th of the month, which means all the government employees that have been put on furlough, they got paid before the shutdown started, so they haven't really missed any paychecks yet. When they get to the 15th of the month, they're going to start missing paychecks. So the government is really they're going to be under pressure to get this resolved probably by the middle of the month. And one of the things I think we'll see is some health care negotiation and put back in there.
Yeah, I agree with you. I think that's how it's going to play out. But we should check those prediction markets.
Yeah.
They have that as a bet. When's the shutdown going to end? All right. All kidding aside, let's get back to business. Somebody asked about Reddit. Hey, is Reddit a good buy? So to begin with, Reddit's a great business. I love the business. I'm glad I bought it. And right now it's priced 16% above where I would like to see the stock price, which would be where the free cash flows I expect from the business are priced and where the profits of the business that I expect are going to be priced. This is, if you offered me a share of Reddit at $170 a share or lower, I would say, yes, sir. And I would give you money for those shares. Right now, I'm like, I'm just going to hold my shares. Thank you very much. And Reddit as a business is a terrific business. I'm going to show you charts on Google because I like how I'm able to show it there. There's always like a lesson available. And the same business, Reddit, we know it. We use it. We think it's cool. They advertise on there. They make lots of money. I'm going to show you their margins and so forth. The market said, you know what? We changed our mind. We think Reddit is not a good investment. So a lot of investors decided we're going to sell Reddit big time. And the stock price was reduced by 61%. This is what this is what I'm looking for. I'm like a big, big fish fisherman. Like I'm looking for a giant marlin. Never fished marlin, by the way, just using the analogy. And I don't know how much they weigh, 100 pounds, 200 pounds, but I'm looking for a big marlin. And maybe I don't catch it every day. Maybe I have to wait a month before I catch a real prize, or maybe every 5 years I catch a giant marlin. But Reddit ended up being a gigantic marlin that you could have caught in this time frame. And then the market decided, you know what? We made a mistake on Reddit. Really? Yeah, it's worth 182% more. Cool. Well, I'm glad you feel that way because I bought shares. And it really skyrockets performance, right? This is going to happen over and over and over again. Okay. And speaking for myself, it's my job to find it. And when I find it, jump on it, buy it, and make money. Because when I look at the Reddit business, what do I like about Reddit? Well, first, I understand what they do. I love Meta, own a ton of that stock. Smaller cap than Meta. Revenues are a little light, but they just IPO'd. I'm not going to pay attention to PEs a whole lot at this point because they're just kind of getting going on their monetization journey. But this is what catches my attention. 70% growth. Wow. 77% growth in the last quarter. Wow again. Well, that's great that you're growing, but when you combine that with 91% gross margins, now, okay, you got me locked in. Free cash flow yield of 23%, and they're a young business. And I think that Reddit has a niche, right? They're not doing what Meta does with Instagram and Facebook and WhatsApp. Those most definitely are successful. Reddit's a different animal, different experience on Reddit. And I think it's going to continue to thrive. So I've got a very desirable business that the market said, you know what? We don't like it. Great time to buy. But now it's just too expensive. So if the market wanted to lower it to $160 a share, thank you very much. I'll buy lots of shares. But until I see more data, and we're going to see more data in about 3 weeks, and maybe the data is so good that they're growing at 100%, I'll be like, hey, man, I'm buying more shares. Or the data is a little worse. It's like, you know what? I'm just going to keep my shares until the business improves. We'll see. But that's my story on Reddit. Let's move on, sir. I noticed on the market, let's see what AMD is doing. That stock is making our friend Mike, dividend investor guy, very happy. 26%. He's going to go out to lunch at a nice place, I'm sure, maybe dinner, because he's got a couple more bucks in his pocket. Very, very good day for AMD. It is cranking. Why is it not showing up here? It should be. The chart's a little behind. So no worries, no worries. Stock Analysis is not the biggest company in the world, so I'm not going to hold that against them. Now they're $340 billion. Wow. Incredible. Incredible. Go AMD. Awesome day. So AMD, good news at AMD, created good news at Astera Labs, up 10%. So I'm going to go out to a nice place to eat today. Maybe order something I don't typically order. Go up the menu a little bit. And 11% rise. This too has been, the market loved this stock, sold it off, offered investors like me, hey, you want to buy this awesome business at a really good price? Yes, thank you. And I bought it. And I was just asked yesterday by a young investor, compare between Astera Labs and United Health. And I said, for a young investor, I would stay invested in Astera Labs. And I'm glad I said that. 24 hours later, I'm like, whoa, 11%. This is great. And this is a terrific business that I think is priced too high. It's just gone up too fast. So wonderful business. I'm sticking around. We got earnings in about a month, and we'll see what they announce. Do you have any charts on Astera Labs, by the way?
Sure.
They might be a little wild to follow, but I'd appreciate seeing what you're seeing in Astera Labs. And
the charts are still looking pretty good. It's 20-day, 50-day, and 200 are still all upward rising and in the proper order. The 5-day is rolled over from a low about 3 days ago, so that's looking pretty good. RSI is positive, PPO is positive, and looking like we'll probably get a bullish crossover here in a couple days. And accumulation is at a 52-week high. I think the chart still looks really good.
incredible. Yeah, very good. Very good. I'm going to stick to it. Thank you, Daryl. That was a selfish move on my part. I wanted to see the charts. All right. Our friends over at Uber, their stock is going up 2.9%. This stock at times has been doubted. Oh, I think Tesla is going to take their business away. Really? And then the market caught itself and said, nope. It's going to, Uber is Uber. And when you look at it fundamentally, it's just a really solid business. It's the leader in its space. I think it continues to grow real well. And 64.9% return. The 1 year doesn't look as good. 5 year looks good. And this is rising 3%. I don't see any news based on stock analysis. The PE looks good. Forward PE looks good. This is a stock that I think is discounted. I just own a lot of it, so I'm not buying anymore. The fundamentals look good on Uber. It's already a big business, $47 billion business, growing at 18%. The quarterly looks good. And that's a pretty good growth rate on a big business. So that looks good. When we look at their earnings per share, free cash flow, this is what I really, really like about Uber. They became a cash flow machine, and it is a cash flow machine. It's $8.5 billion of free cash flow in the trailing 12 months. And you think about that logically, right? How many cars does Uber have to buy? None. Its drivers buy the cars or lease them. So if it wants to double the number of cars available to its clientele, the amount of capital they'd have to put into the business isn't very high. Now, it may change if the robotaxi era requires that Uber invest in order for the timing to be right, meaning they don't want to wait around for somebody else to invest in robotaxi on Uber. They have to prime the pump. They have to put robotaxis out there. And I think they're going to do that with partnership with Neuro as a software layer. And Neuro is a software company owned by Google. And they're going to do it on that EV company, Lucent. So Lucent cars, which are really nice. And it's going to be a Lucent car with Neuro technology on it. Neuro is similar to what Google Alphabet uses with Waymo, but it's a separate company. It just does software and everything you need for a robo-taxi. So I think that may change things a little bit. But overall, I love how they've grown their cash flow. Their margins are a little tighter because they share the revenue with the driver. Makes sense to me. Just their overall scale is what's their moat. Once you become big, but it's the name that you, speaking for myself, and I think I could say that at least 50 million people in the United States feel the same way. As you land at an airport, and you're comfortable calling an Uber. The experience is consistent, and you're going to get to your destination safely. And that goes even further when you're a parent. And let's say one of my sons, when they were younger, hey, I'm going to fetch an Uber for them. Cool. I feel comfortable with that. But if you have a new service, well, I'm not going to be comfortable with the new service until I kind of try it out. And I'm certainly not going to put like one of my kids in service like that. So Uber is having a good day, and this is a terrific business. What are analysts thinking about Uber? So in general, analysts think it's discounted by 8%. If they think, one analyst think it's really discounted. It should be $150 stock. And the most pessimistic analyst thinks it's an $84 stock. all the analysts combine their consensus that believe that Uber is going to continue to grow and be a $76 billion business in 2028. So nobody's expecting that, oh no, Tesla is going to come out with robotaxi and take their business away. Not at least in the next three years. And their forward PE is supposed to drop, but I think that it's not going to drop. The stock price is going to rise. It'll consistently be a mid 30 PE valuation because of its growth. It's going through a growth period. And I think internationally is where they can continue to grow, and they can grow other categories like food delivery and other delivery services. So overall, that's where I'm seeing Uber. I'm going to share my valuation and see if Daryl has any charts on Uber. So I think Uber offers a fantastic discount. I own a lot of Uber. I think it's one of those that at times I didn't agree with the market when it was selling it off. I was thinking, no way. You're not going to disrupt Uber that quickly. If it's going to get disrupted, it'll be a long war against Uber, because Uber has been through that, by the way. They beat out Lyft. It was like a battle. It was a battle among two businesses that wanted to be the dominant player in ride sharing or ride hailing, and Uber won that war. So they've been tested. So if Tesla wants to come after Uber, I think Uber will be ready. Organizationally, they're like, all right, we can take you on, and we'll see what happens. Those are my comments on Uber. Can you share some graphs on Uber?
You bet. So it is definitely an increasing price. We have higher highs and lower or higher lows, and so that's looking good. They have 20-day, 50-day, and 200 are in the proper order, and they're all increasing. Based on the shape of some of these patterns right here, I'm thinking that Uber's going to be at 107, which was what the analyst estimated, but I think it's going to be about 107 as well here within the next few months. The RSI is sitting at about 59 at the moment. The PPO has been positive since August the 15th for the most part, just hanging in there, but it is positive. We did have a bullish or bearish crossover in bullish territory, but it looks like it's going to recover that here pretty rapidly. The accumulation is just slightly lower than it was at the end of last year, but it's definitely looking a lot better than it was back in December and February. It's been a pretty much steady increase for the most part, back up to near 52-week highs, and the money flow is positive at the moment. So this is to me is a good steady chart. Looks like it comes down and tests the 50-day every once in a while, and it holds that 50-day. So I don't see very much downside at the moment.
Yeah, and I think when it comes down to test that 50, I think the market probably reminds itself, hey, the last time we doubted Uber, a bunch of buyers came in and bought the shares and made a bunch of money. And,
yeah,
it's kind of like, do we want to do that again? Do I want to sell and then see that the stock is worth, 25% more in 3 months? So I think that's in the recent memory.
Yep.
Good stuff. So one question that came up from Peyton: will robotaxi increase Uber margins long term because they will not need to share the revenue with drivers? That would be logical, that if you're going to have a platform that is basically machine driven, definitely. I think it'll require some upfront investment. The thing I like as a kind of vote of confidence is that our friends over at Google Alphabet, they don't like buying businesses, or I should say they don't like forming businesses that are marginally good. Like they like platforms. They like having a search engine that creates giant piles of cash for them every quarter. They like YouTube, where they don't have to create one video, but creators create videos, and now YouTube's the fastest growing, largest streaming platform on earth. They like the cloud infrastructure business. They build data centers. People move, or companies move their workloads to those data centers. And they, in essence, a data center, I would describe it as you're building a giant apartment building, and you have 1,000 apartments in that giant building. People move in, they pay you rent, and you make money because you're at full occupancy and you're making lots of money. That's a data center, except you're not renting out apartments, you're renting out compute, high performance computing, GPUs. And these businesses move in and they don't move out. It's very hard to move out. And so Google likes that business. So now I'm getting around to Uber. Sorry, it took a while. The fact that Google has put so much into Waymo, they see a lot of money there. And I can't disagree with them, which is if you change global behavior from I have to own a car to why would I own a car? We have robo taxis everywhere. I literally hail a ride, and within 3 minutes, there's a car in front of my home, takes me to where I need to go. I don't need to worry about parking. Takes me right up to the entrance of the building I need to go to, versus, oh yeah, I'm going downtown. I'm parked 3 blocks away. I'm going to walk to my destination. I'm going to pay $12 for parking, and on the undesirables of being a car owner. Oh, and while my car was parked, it was door dinged, or worse, it was something else, or I got a parking ticket, or I got a flat tire on the way to that particular meeting. All the above kind of go away when you're like, hey, like when I ride the subway, or here in LA, it's the metro. I don't worry about the train, maintenance. If it breaks down, I get off and I take the next one. If it, I don't worry about it's, who's going to take care of the rails, and who's going to, are the drivers of the metro being paid this period correctly? All that stuff is somebody else's problem. So if there's a big change in the global way of transporting, from point A to point B, it's going to be massive. So I think Google Alphabet's entry into the space, as well as Tesla, they're seeing that as a huge market. So now back to Uber. Uber sees it as a huge market. So if Uber can be a player in that huge market, yes, long-term profits are going to be substantial. Profits, cash flows, the whole enterprise value of Uber is going to be massive, which is why I think Uber is on my list of companies that will be $1 trillion in market cap at some point. It's just in the cards. They're tapping into businesses that are very, very big, and they have a very, very good position in their markets. All right, so let me check on. So Falls Grave, BTBT has been doing well lately. Let's take a look at that one. I think Ben 10 wanted to look at ACHR. So we'll take a look at that. There are reasons why I don't have a car right now. So, this story is aging a little bit, but this is 2016. So it's 90 years ago. I worked in Southern California, in Santa Monica, California, and managed a team of 10 people, and hired somebody, and they had moved from another part of the country. 2 people did this. So they moved to Santa Monica, and they decided, hey, I'm not going to have a car. And I thought it was crazy. I was like, well, what? And we were having lunch or something. They were like, yeah, man, I did the numbers and insurance, car, parking's really difficult in Santa Monica. And they went down all the reasons, and I go, hey, I can't argue with that. And they're like, and whenever I want to take a long trip, I just rent a car. Well, that made a lot of sense then, but I wasn't totally bought in. But in today's era, it makes complete sense. There are probably so many more people doing that because car prices have gone up. It's expensive. And in a lot of ways, like sometimes when I go to big sporting events, I don't drive because it might be more dollars to pay for Uber, but the experience is very different. They drop me off right in front of the arena. I go in, watch the game, leave, get in another Uber, drive home, versus the whole parking at a big event is such a pain in the neck. And these arenas are charging big dollars. Like you park at SoFi, they want like $40. And that's a lot of money, man. It's like I can fetch an Uber for $50. And yeah, I'm going to end up paying on the way back. So it's going to be more money. But once I add gas, which in California, it's like $5.20 per gallon, I'm probably spending a few extra dollars on Uber, but the experience is far better. So, all right. So we went big on Uber. So you're on BTBT. You want to get going on BTBT?
Yeah, so it looks like it's been in a downtrend for a while, but it looks like it's broken out above that. So that's a good sign if it can break out above this level. I don't know anything about this company, but it is trading above upward sloping 20-day. Looks like the 50-day is also upward sloping now as of a couple of days ago. 200 is still downward sloping. But this looks pretty positive to me. The
It's a Bitcoin
RSI
miner, so Bitcoin's been going up. Bitcoin
okay.
prices.
The RSI is not slightly overbought, 70.77. And the PPO is positive and in bullish territory, and it looks like the magnitude of the differences between the 12 and 26 day are getting wider. That means momentum is getting stronger. And money flow is still in bullish territory. So that looks good to me from a chart perspective.
Yeah, and the whole space of Bitcoin and crypto has been having a really nice month, and Bit Digital is a miner of Bitcoin, and they're up 50%. Wow, incredible. And I think they're moving some of their data center operations to do AI as well. So they definitely know how to run GPUs because that's kind of like the technology that crypto started to use 15 years ago to mine Bitcoin. So these guys are on top of it. And it's a $1.2 billion market cap. So really small market cap. Analysts think it's discounted. Now the stock isn't like overly fun to own at times. I mean, look at this sell off. It went from $5 down to $1.70. It being a low price stock as well, it doesn't help it because investors tend to have a negative attitude towards a stock that's priced this low. There's like risk inherently in a stock that's priced low. Their revenues are growing, and this is probably going to do far better because this is a little bit like oil. If Bitcoin prices are really high, these guys are making a lot more money because they're mining Bitcoin. So the numbers are probably going to look better once they announce. They're going to be announcing November 17th, in a month and a half. So Bit Digital is an interesting investment. I think for a long-term investor, it's a pretty good idea because they're in a couple places that have been doing quite well. They have to put a lot of capital into their business. But let's see, 3 analysts. Wow, these analysts are really high on the company. And the revenues are going to really crank up. It might be that they're moving some of their resources to support AI workloads. That's not a bad idea. So it's really working today, but I think it's working because Bitcoin prices are up. Also, I think that the move to the data center, like CoreWeave, originally they were a cryptocurrency miner and they moved to AI. I think Nebius was also the same thing where these guys are smart. They're like, hey, we know how to run data centers. And if people want high performance data centers, we know what we're doing with GPUs. So that is BTBT.
They do have a pretty high short interest. So they may be getting a little bit of a squeeze right now, and that's what's running them up, in addition to Bitcoin going up.
There's usually no sympathy for short sellers, huh?
Yeah, it's sitting at 14.5%.
Archer Aviation. So I think Ben 10 wanted to talk about Archer. And are these guys are also being shorted, right? Quite a bit. So short selling. Yeah, 15% of shares outstanding are being shorted. So Archer's having a great day. Year to date, wow, look at these swings. Woo-hoo. But it's doing well, up 30%, up 49% over the last 30 days, up 327% over the last year. These guys are an $8.2 billion market cap company with no revenue. And I think Archer designs aircraft. So they have a vertical takeoff aircraft, and they're expecting that this is going to be a little bit of a ride-hailing service where you'd be, on one side of Los Angeles wanting to get on the other side of Los Angeles. You would hail one of these rides, and they would take you across Los Angeles. They don't have any revenue, so this is completely judgment call. Is Archer going to make it? If they make it, is it going to be a valuable business? So, that's not my cup of tea, especially in a business where I don't understand it. I would just say that, what am I concerned about? Okay. So I'm already concerned that so many darn drones are flying around because I'm afraid of commercial aircraft, having an incident with all these drones. There's already been issues, where airports report, hey, there's drones flying near the airport and pilots reporting it. Now we're going to have a bunch of vertical takeoff aircraft flying around at all times. I think the air traffic needs to be controlled just from a safety perspective. I'm not a pilot. I don't know that area all that well. I just know if something falls out of the sky, bad things happen. People die, people get hurt. And I would not want to get on a vertical aircraft, especially one that's brand new, untested. And I don't know what everybody else thinks, but I just don't see this as like being a massive market at some point. I think it'd be kind of a neat thing. But I don't know that it's going to have a big addressable market. What are you seeing with Archer?
Well, I hear a lot of talk about this one and also Joby. And I don't think either one of them are profitable at the moment, but there are some pretty high hopes for them. You referenced LA. The most of the discussions that I hear are based around New York, where the demand would probably be a whole lot higher. But for this particular one, they're getting close to at least their 1-year high, and I presume this is probably not quite all-time high. So they were a lot higher in 21. How long has this company been around? Okay, so they IPO'd, looks like at the end of 2020, and looks like they peaked out at around 1860. So they're actually a little bit below that. So they're sitting at 12, but they're getting ready to break above this 1-year high anyway. The RSI is in overbought territory. The PPO has shifted into bullish territory and looks like the momentum is getting stronger at the moment. I also hear that the government is trying to push the regulatory bodies for these two kinds of companies, Joby and Archer, to speed along the approval processes. So that may play into what you were saying about them not testing them thoroughly enough, which
And
could be
there was
go
a
ahead.
accident in New York that took the life of executive 3 months ago, and I remember that happened. And I know on Discord I commented saying this is why I think these vertical takeoff companies and having a lot of traffic in the air, like Kobe Bryant here in Los Angeles was taking a helicopter service, so he could shorten his commute from one part of Southern California to another, and that ended tragically. I mean, these things happen. They happen more often than commercial accidents, right? Thank God. But I think it happens too much now, and I'm just thinking we're going to increase the air traffic with a bunch of these smaller aircraft. Now, it's one thing for an Uber to be computer or machine driven and you get an accident, but the survival rate's super high, right? Oh no, that person walked away with a broken arm. But once one of these things falls out of the air, it does not end well. Usually everybody perishes. So that's the big difference maker. And I don't know that the public would be all that accepting of these things are flying above us. And if you have one accident, it's too many. I think the public would want it shut down. All right. So good stuff. Thanks, Daryl. I heard through the chat that trading platforms are selling off today. What is going on? Robinhood. Oh, that's not too bad. Yeah. So Robinhood's down a bit. What about Coinbase was up earlier today? We didn't have time to cover Sprouts, but we don't have to cover Sprouts. Let me take a look at Coinbase. Yeah, Coinbase is up because Bitcoin prices are up. I'm hanging on to Coinbase. The things I like about Coinbase is the CEO is really, really smart, and they're trying to do things that have never been done before. First, they started a cryptocurrency exchange when I would say 90% of the market, if not 95, was like, Bitcoin is worthless. And now it's like a big, big asset class, number one performing asset class over the last 10 years. So now everybody's like, yeah, hey, crypto sounds good. You can buy it on any brokerage now, right? At least an ETF. And now the businesses that I'm excited about is they want to develop the rails, which would be the market exchanges for the future of stocks. So the way we trade stocks, I'm going to oversimplify it, is 100 years ago, you would show up to Wall Street, and if you had a seat in the exchange, you can go in there and you can trade. Very inefficient, in my opinion. Okay, you go in there, you have to pay a lot of money to even be allowed to go in there and then trade. So you would then leverage that position and you would charge people to make their trades. Okay, again, not efficient. And now you fast forward 100 years. We do the same thing, but with computers. We have a big computer system and we trade stocks. We buy them, we sell them, you buy options on them. Wonderful. But the concept of a stock is that a company issues out literally paper, and they had 1,000 sheets of paper, 1,000 shares, and they would issue them out. It's pretty much like our currency. We used to issue out paper and metal coin-based currency. Well, what Coinbase and Robinhood and all these futurists are thinking is you need to tokenize stocks and then have it's kind of like the metric system versus the standard system, right? Standard English system, I believe. Now, I believe that the metric system is mathematically a better design numerically. I don't think anybody's going to argue with me. The English standard, measuring methods make the math harder. And that's kind of like what Coinbase and Robinhood are arguing is we're making it harder on ourselves. We're instituting legacy methods into a digital world, which we get by with, but there's a lot of inefficiencies. And if you put it on a true digital platform, then it's going to be better for everyone. We can have 24/7 trading. We can have all these benefits to the investor, especially the international investor. And if they get their way, Coinbase is going to have the rails built. They already are the institutional company of choice if institutions want to offer crypto. So you don't know it, but if you go buy, and Robinhood's a different animal, but if you go buy crypto, let's say on Charles Schwab, they're probably using Coinbase as their platform is really what's being used. And they provide it as a big service to that brokerage. They're doing that. Well, Coinbase would kind of eliminate the New York Stock Exchange, eliminate a lot of other legacy institutions, and provide a better solution for all investors and become massively valuable. So that's their moonshot. If they pull it off, it'll be great. If they don't pull it off, it's still going to be good. So that's Coinbase. That's what I love about them. They're trying to do things that have never been done before. All right, sir. So good stream today. I think we covered all bases.
Let me make a little advertisement if you can give me the screen for just a moment. So we've been asked about options, and also was asked specifically about KRE, which is a regional bank ETF. And I've been looking at the seasonality and the charts for this particular ETF. And I want to model a trade this afternoon. I'm going to go live at about 2:00 Eastern. And we'll spend about 30 minutes just talking about where we sit with the KRE, what the seasonality tells us, and to model a options trade. So if anybody's interested in that, feel free to join me then.
Are you going to go over kind of theorizing this is why you're doing it. I'm trying to, and I'm going to put it in my own words, is I'm doing this trade because I want to earn $500 or $1,000 in this form. And then you measure the result and see if you accomplish what you were looking for.
I will be very specific.
Awesome.
I'll tell you exactly what I'm expecting.
So it's a lesson on how to make money, and how to make money near term, how to develop a income machine is what I'm hearing.
Yep. So we'll see how I'm already in the money on it. I've already traded it because I modeled it over the weekend and I traded it this morning. It's already in the money. Not that I expect it to stay in the money, but I'll share with you exactly why and the profits that I expect and where I expect to take profits.
So how do I find your stream? Do I go to your YouTube channel?
Yep.
Okay, I will be tuning in, sir.
If anybody needs my YouTube channel, let me post it in the chat real quick.
Yeah, that's a good idea. Yeah, we've already got other questions. How can we join? So put your link on the Slack, please.
Yep.
I mean on the chat. Right. I don't want to let this go by. I think Ben Tem earlier referenced that he was in the Navy, and then he had a different story here where he was getting transported helicopter. So Ben 10, thank you for your service, sir. Really appreciate you serving in the Navy and really, really do appreciate that. All right. So there is the information on where you can watch the stream later today. It sounds like, I don't do a lot of options, and I don't get my mind around income generation. My mind is, I'm having the best year of my investing career, had my best year last year. How do I just keep compounding? That's my mission statement, is compound, make lots of overall money. But I'm very fascinated to see how Daryl does this, because it's like watching I just look forward to seeing how he does it, because I think it's fascinating. So I look forward to tuning in.
All right. Well, hope to see you there.
Yeah.
Hope we can all learn something together. I'm not an expert. I typically buy options for insurance. So I'm not an expert, but I'm willing to share what I know and have learned over the last couple of years.
Thank you. I've learned a lot so far from you, so I appreciate it. So last topic. I posted this on Discord and on X. David Tepper is up 39.75. He is killing it. And I know that, I'm doing really well. Now it's 40. Wow. But the scale of what this dude's doing is incredible. And the scale, Alibaba, he owns $1.3 billion of Alibaba. That's his biggest position. He went into United Healthcare, but let's just go over his big wins. On Alibaba, just this quarter, like July 31st to the current value, which it would be the third quarter plus a couple of days, he's made $525 million on Alibaba. Nicely done, sir. Next stock down, Intel. Jeez. Why is the universe so, generous with this guy? He's made $121 million on Intel. Well, we know what happened in Intel. Next one down. And I'm skipping, I shouldn't skip. Micron up 54%. He made 55 million. GLW, which is Corning, which they do like a lot of glass, and they do like all the glass, I believe, on iPhones and stuff. Up 56 million. These returns are phenomenal. Next stock down, Baidu, China, up 37 million. Lam Research, semiconductor, 21 million. I'm skipping those. I just covered 5 stocks that are all doing above 50% just in 3 months and a couple of days. Nicely done, Mr. Tepper. You are phenomenal. He owns the Carolina Panthers. He runs this massive portfolio. And I know that he's been consistently good for a number of years, but this year he's just killing it. And he's got a couple losers, but not too bad. I mean, the worst one, I guess, is Energy Transfer, and he's down 6.78%. But I mean, geez, no problem. Down 26% on Goodyear, but he owns a tiny position compared to everything else. So it's, really immaterial. So that's one of the best in the game right there, David Tepper. And if you do the same thing, you can buy an NFL football team.
Mm-hmm.
And down the list, Chase Coleman, this guy's great. Robert Venall, this guy's great. This is Tom Lee's portfolio, the Granny Shots portfolio. It's doing well. Kathy Wood, she gets a lot of negative press, right? I would say a lot of hate. She's doing great. So these guys are doing really well. So very good year to be invested. Very bad year to have left the market, because you're staring at these returns going, oh no, I could be making those amounts, but I'm not, because I left the market. Small caps, go small caps. And let's look at the heat map. So Meta's been on a sell-off. Interesting. We got some green in the software infrastructure space, the semiconductor space, hardware. Uber's up 3.3 now. Aerospace and defense is a little green. Energies, oil prices were up today. And those are the green spots there. All right. All right. So we're 2 weeks from earnings. I think what I'm thinking, the first big day is going to be October 14th. So we're actually a week away, right? Because tomorrow's the 7th. So a week from tomorrow, JP Morgan, Johnson & Johnson, Wells. There's a couple of small ones leading up to that, but this is the first big day in my mind. This is when it starts to get a little crazy with a lot of news. And these banks do tell us quite a bit about the economy. They will make comments about the economy. And from there, it's like, all right, just it's going to get really, really busy for a while and stay busy for about a month and a half. All right.
That's actually another reason why I'm bullish. I have a list of reasons why I'm bullish, but that's one of them. So this is the first quarter since 2022 where the earnings expectations have been raised in the quarter. So since 2022, they go in with a certain expectation and they get lowered. They go in the next quarter, they go in with a certain expectation, they get lowered. This is the first quarter where they have actually raised the guidance. So that's just one other, and I can provide a graph at our next live call if anybody's interested in it.
That'd be very interesting.
Let me or Victor know, and I can pull up the chart. But that's just one other reason why I have a check mark in the bullish column, although I am cautiously bullish. I am still bullish for a number of reasons.
Yeah, I'd love to hear more about that.
Okay, let me make a note to make sure I have that for our next call.
Excellent. So Carlos had a question of why is Meta selling off? I mean, the one thing I could say is, but geez, man, it, I'm kind of talking myself out of the comment. I was going to say they're investing a lot on their AI business, but maybe the story is Meta's AI is not it's not being adopted at a very high rate. Right now, the ones that are in the lead is Gemini, Google Alphabet, OpenAI, ChatGPT. Those are the two big horses in the race. There's a bunch of others too. Perplexity. You got Grok. You got Meta AI. You've got Anthropic. Okay, and I'm sure you guys could list, collectively another 20. Got it. Now, I think that on a day like today where OpenAI is like, hey, we're going to open up another data center and we're going to spend more money, maybe investors are like, whoa, I don't think Meta's going to be one of the top players in the AI space. And that may end up being the story, by the way. That may end up being factual. But I still think Meta is a terrific business. It's discounted. If I didn't own as much as I do, I would be buying shares. I told myself that if I see the stock price drop to a certain level, I'm going to buy shares. I'm willing to violate kind of a position size kind of, preference. And let's say it dropped to like 650, 660, I'd probably buy more shares. If I did not own shares, I'd be buying shares. I'm probably going to buy some shares for my older son and manage his portfolio. So that's where I'm at with Meta. I don't see any big like smoking gun kind of information on, oh no, that this product failed or something like that. Yeah, so that's what's going on with Meta. All right, sir. Once again, thank you so much, Daryl.
Thank you, Victor. It's good to be here. And thank you, everyone, for choosing to view today.
Yeah, it's going to be a good week. I think this is going to be our last calm week. The next week, it's just going to get crazy. It's going to be earnings. It's going to be positive crazy, by the way. Good crazy. And then we're going to stay in that for like 6 weeks. And our streams have been getting more and more people, which is great. Hopefully Daryl can join me on some watch parties. Those have been phenomenal, super fun to do, interesting, and really appreciate everybody who attended, all your questions. It's awesome to see all these questions. And one thing I'll continue to repeat is 2025 is showing once again why those who take it upon themselves to learn to invest, to learn stuff like Daryl, right? He gets into his investments so deep. You can see that there's a passion and a dedication to it. That kind of behavior, right, is being rewarded in 2025. All the institutional investors were on the outside looking in the month of April, while investors like myself, retail investors that are like, very interested in seeing capital grow, that I own, that my family depends on, we're killing it. And we're going to keep killing it. And every year we get smarter. Every year we get better. Our skill set advances. So that's what I'm talking about. And I think it's just going to keep getting better in the future. I love the Robinhood story because it empowered so many young people. And you think about what the voices that we heard 10 years ago, are actually as recent as 3 years ago. Oh man, all these investors were foolish to be on Robinhood. It was like they were gambling. And And yeah, I can understand those comments, but life's a gamble. I gambled when I decided to go to college. I could have picked up a job and started making money immediately. I gambled when I made a choice on a career. I gambled when I switched careers from one to another. So, if you're the type of investor that's really betting on yourself and continuing to learn, I would love for you to be a consistent viewer of this channel, because that's what my mission statement is for me to get better and get more informed and be better at long-term investing, and to learn from guys like Daryl, and to interact with you guys so that we can get better together, so that we can become better investors over time. Because this year especially has been the year of the individual investor who had been investing in themselves to learn, and now they're making a lot of money and a great rate of return. So it's been an awesome year.
You
and these streams.
mentioned one other thing, and I'll put this in the bullish side of the pro cons list of why I'm bullish. Is you mentioned institutional investors. Yes, last week there was a report that 75% of professional money managers are underperforming this year. The reason for that is they didn't buy into the April lows like retail investors did. So those professional money managers, 75% of them that are trailing the market, have to do something this quarter. And my bet is they have to be buying in.
Yep. And it's just music to my ears. And you think about like the institutional investor, they charge their clients to make those decisions. So you're with an institutional investor and you see your statement and it says that for the year you're up 6%. And you're like, that sucks. The S&P's up like 15%, 14%. And I have to pay this person 1% to 2%. It's like a double negative. And that's what I realized, 10, 15 years ago, probably about 15 years ago. And I went all the way. I hired somebody who was like, I was working with personally. And the decisions he was making, even at the moment, I was like highly questioning. And I'm so glad that I took the time to do that, because at that time, 15 years ago, my kids were not 25 and 21. My kids were 10 and 6. I wanted to spend time with them. I had very demanding career. Good stuff was happening. But that whole experience made me realize I need to do it on my own, because I care about my capital. Other people don't. They care about that 1% to 2% fee they're charging.
Yeah.
And they want to spend as little time as they can with you. They don't want to answer questions. They just want you to keep paying them 1% to 2%. No, thank you. I'll do it on my own. I'll make lots more money, and it'll set me up to have a lifelong passion, a lifelong activity that if I follow in the footsteps of the great Charlie Munger, not that I would ever be anywhere nearly as close as successful as he was. He did it till he was 99. I'm good with that. All right. So let's close it out, sir. Thank you again. Everybody, have a terrific week. We'll talk to you soon.
All right. Take care, everyone.